And here we are with the next video in our series, which is designed to help you become familiar with our zones and how we use them. In this video, we want to talk a little bit about the different types of zones that we use and identify. You know, maybe the anatomy of a perfect zone. And we really have three main identities when it comes to zones. And another reference point, and remember, these zones are reference points. Everything that we use on our charts are reference points. Another reference point that we have that you'll see on our charts is when we have a dashed line here, represents an area of previous unfinished business. And let's talk about that for a second. Unfinished business represents an area in the market where there was a very obvious imbalance the last time the market was there. A lot of times it's really a low volume type of atmosphere. The last time the market was there and created this what we call UFB, or unfinished business. Maybe news came out, everything got really thin, and in this case the market hopped out of this area earlier this afternoon at somewhere around 10 or 10:30, and there was an imbalance. Everybody wanted to be a buyer, everybody was hitting the offer, and there was no supply. There was not much in the way of traders hitting the bid, not much in the way of sellers willing to hold pat. So offers kept lifting in the market. What the market had to do previously when it had been in this area was race to the upside to find an area where two-sided trade can occur. But anyway, unfinished business represents an area that when the market comes down into, if we have some type of confirmation, we're going to use it as a reference point to initiate a trade. Now this is perfect because this was here in our last video, and we were able to see how the market reacted off of the area where this line was. Right now here we are, maybe an hour and a half later, and we've seen the market now react since then off of two zones that were there. So you've got to see here ahead of time where the zone was, and now the follow-up and how the market reacted at these two zones. So again, to repeat identity, well, reference point number one would be unfinished business. Okay, and when a zone or an area of unfinished business gets filled in or breached, which it was here, what we do is go ahead and erase it. So when we update our charts, you won't see it there anymore. It's a thing of the past. We don't refer to that area anymore. So at this point, it was used up on the way down here. It shouldn't be here anymore because we're not going to pay attention to it. So now we have the market coming, first off, back up into this value transition spot that we talked about earlier. And in the last video, we talked about what a value transition is. We see the market react there, give 1, 2 opportunities to work shorts in there. Market from there proceeds to sell off down into our next demand zone, which has been at the same spot here, guys. These zones have not shifted. Once they get put into place, they stay until that area gets breached, until they get violated. Then we'll either take out the zone if the whole zone is violated, or we'll take out the portion of the zone which price violates. So back to our three types of zone identities, if you will. Number one would be a swing zone. In a swing zone, we're going to use a little bit of a wider, deeper color here in red, or here in blue, as you see the difference here in blue, how this one stands out from this one. We're going to use that to identify a swing zone. A swing zone is a zone that occurs where the market is headed in a certain direction. Something happens in the context of the market, in the order flow, maybe some type of news comes in to force an abrupt change, a shift in the order flow. So the last time the market was here, it had been selling off into this area. Something occurred to make the market do an about face. There was an imbalance which was created in the order flow where sellers were in control. Market got into this area, something shifted, turned the supply off and turned the demand on, and then the market raced out of this area to the upside. So it changed direction here. So that's powerful. Actually, it's not this zone, it's this zone. And that's powerful. Now, not to say that if a zone is not a swing zone, it's not one that we can use as a reference point. It's just that the swing zones were areas that actually something occurred there that actually changed the direction of the market the last time the market was there. Okay, so to repeat, we have value transition zone, swing zone, and then zone identity number 3 is going to be what we call a continuation zone. And a continuation zone is, today is mostly a range-bound day, so we're not really seeing any type of one-way type of activity for the most part. On a one-way type of day, you're going to see the market continuing to push in a direction, maybe form a little bit of balance. Value gets accepted as price gets accepted higher. Value comes up to meet price, and then from there the market heads higher. So it's trend, balance, trend, balance, trend, and it will do that for a while because that's the definition of a trend. Price moving in a certain direction, getting accepted, and then value comes to meet price. That's a continuation zone. So, yes, there was an imbalance that came in anytime we have any zone whatsoever, because guess what? If there was no imbalance that came into the market the last time the market was here, well, then the market would still be here going sideways. Right? There had to be some type of imbalance that came in the last time the market was here in order to force the market to continue to move to the upside. Now, it didn't necessarily change direction on a bigger time frame and head the other way, but yet there was enough of imbalance to come in to continue, to force that continuation in the market to the upside. So again, to repeat, 3 types of zone identities. We have a value transition zone, and we talked about this earlier, right, in the last video. And we'll actually do a video, and we'll be continuing to add videos into our toolbox here for you to access. But value transition, market's pushing up, price gets rejected, forces down through currently forming value and forms a new zone. And that's a value transition because the market transitioned from forming value higher to breaking lower through a current zone, forming a new zone, breaking lower. Now that zone turns into a value transition zone, which we can sell on upticks here, here, here. So identity 1, value transition. Identity 2, swing zone, representing an area in the market where an imbalance came in strong enough to change the direction of the market on maybe slightly higher time frame. So not just a little 1 or 2 point move, but a bigger move occurring at what we call a swing point. So that's going to be this zone here, identified by thicker blue or thicker red. So identity number 2, swing zone. Identity number 3 will be a continuation zone marked by a thinner border of blue or red. Now again, to repeat, a continuation zone, because it's a continuation zone, doesn't mean that we can't use that zone. It just means that it's not a swing zone. It's not a zone that actually changed the direction of the market the last time the market was there. It was a zone that provided a continuation in that existing trend or auction. Now, there's many advantages to this service that we're offering here. One of the main advantages is going to be we're offering and we will be providing periodic real-time updates throughout the day. So if a major zone gets taken out and a value transition forms, a value transition zone or a new zone forms, we'll send out updates. Now, we're not going to be sending out updates every 5 minutes. If a minor zone gets taken out, you're going to have to recognize the fact that if the zone gets taken out, if price would have broken through this zone, it would have been null and void. It's no longer a zone. We're not going to pay attention to it. But we will be sending out periodic updates, which are a very important part of this because you'll be able to see value transition zones. And we'll try our best to alert you of these value transition zones as they form as quickly as we can. So to repeat, 4 reference points, 3 of them being zone identities, 1 of them being an area of unfinished business, which we just had in here, which was filled out, so we wound up erasing it from our screen. The other 3 reference points are our zone identities: swing zone, value transition, and continuation zone.